Hi YouTube. In this video I'll look at 4 trading apps: Robinhood, M1 Finance, Webull and TD Ameritrade, and compare point by point in several categories to find the best and worst app out at the moment. Keep in mind this won't be a quick 5-minute review or comparison video. I think if you're going to be depositing your hard-earned money into one of these brokers, you should know what more than a 5-minute review can offer, and also do plenty of research on your own. For those that want the quick and dirty answer, this is what I found. Robinhood should be avoided. M1 Finance, great for long-term passive style investing. Webull, an overall good broker. And TD Ameritrade, an overall good broker, in my opinion the best in the group, but it depends on what you're after. Now let's get into the detail. Part 1. Fees, premiums, bonuses. First is a trading commission, which is the fee you incur when you make trades. For all 4 brokers, this is 0. Really great for the end user. Withdrawal fees. Now this depends on the type of withdrawal. Either ACH or wire transfer. ACH is automatic clearinghouse. Here are the main differences. ACH usually takes 2 to 3 business days and are most of the time free, while wire transfers are completed within 1 business day but will cost more. For the slower ACH transfers, Robinhood, M1 Finance and Webull are all free. Ameritrade is only free for partial transfers, and if you want to transfer the full amount, there's going to be a $75 fee. For this criteria, Ameritrade lags behind the pack. Minimum balance. For Robinhood, minimum balance is $0 for the trading account, $2,000 for the margin account, which you need to pay for. M1 Finance is $100 for the trading account, $500 for retirement, and $10,000 for the margin account. Webull is 0 for trading, $2,000 for margin, and 0 for retirement. And Ameritrade is $100 for trading accounts, $2,000 for margin accounts. The winner here for trading accounts is obviously the 0 minimums from Robinhood and Webull, but $100 minimum on M1 Finance and Ameritrade isn't really that much. $2,000 minimums standard for margin accounts on Robinhood, Webull, Ameritrade, but $10,000 for M1 Finance. Now this ties into their margin account and how they're set up, which I'll discuss a little later. The lower minimums are better for people that want to just get started using margin, but I really commend M1 Finance for having the higher minimum of $10,000 because it actually protects new users more, not friendly for experienced people, and it seems like they're not too keen to hand you the noose to hang yourself with. Next is the sign-up bonus. At the moment, there are no sign-up bonuses for Robinhood and M1 Finance. Webull offers 2 free stocks. Let's look at the conditions. Open an account, get first free stock between $2.50 and $250. To get this, you need to finish your account opening process within 24 hours of starting it and receive a free stock. Please be aware the value of the stock may fluctuate. So it sounds like the value could be lower than $250. If your account opening takes longer than 24 hours, this offer is null. To get the second stock, deposit any amount. Get second stock between $12 and $1,400. What are the conditions? New brokerage account holders who make an initial deposit of any amount will be able to claim a free stock, valued between $1,200 and $1,400. Free stocks can only be claimed when the deposited amount has settled into your account. Please note deposits may take up to 5 business days to settle. Overall, the conditions aren't too bad. It does suck that you can miss out if you don't know the conditions. Let's look at the odds of getting the high value stocks. For the $250 to $10 stock, it's almost a 1-in-1 shot to get it, so you're probably most likely going to get something here. $10 to $50 is about 1 in 53. $80 to $100 is about 1 in 1100. And $100 to $250 is 1 in 10,000. Now the odds for the second stock you get, which is between $1,200 and $1,400, for the first bracket, $12 to $30, a 1-in-1 shot almost, $30 to $100, 1 in 53, $100 to $200, 1 in 1100, and $1,000 to $1,400, a 1 in 10,000 shot. Considering these odds, it's an okay bonus. It's more than 0. You're likely to get something between $250 and $10 when you sign up, and something between $12 and $30 when you deposit money. The odds of getting the 250 stock or the 1400 stock is very low. 1 in 10,000. It's pretty brutal. Bit of a side note, but many popular YouTubers should probably disclose these odds to you. They recommend Webull and talk about the free stocks, but the odds are really shit. Considering the amount of money you'd probably deposit into these platforms, it gives me this loot boxy scummy vibes from YouTubers who shield this site. Anyway, moving on. Ameritrade actually offers up to $600 depending on the amount you deposit. Now this is only for the individual, joint or IRA TD Ameritrade account that are funded within 60 days of opening the account. But the account must maintain an equal or greater value after the net deposit, minus any losses to trading or market volatility, or margin debit balances for 12 months. Or Ameritrade may charge the account for the cost of the offer. And keep in mind that the deposit amounts are pretty large. If you deposit $25,000 or more, you get $100. $100,000 or more, you get $300. And $250,000 or more, you get $600. When I consider these conditions, it's really only worth it if you're with it for the long run, at least a year. And when you're investing, your time horizon should be at least a year. If you're in it for the short term and you've got a low amount to invest with, Webull is the winner here for you. If you've got a large amount and you're in it for the long run, Ameritrade. That being said, I don't really like Webull's offer for the free random stock. It kind of plays on people's instinct to gamble, which is kind of a scummy move. Referral Signups. So bonuses you get when you sign up using someone else's referral link. M1 Finance and Webull don't have one as of writing this video. Ameritrade does. Here are the amounts. $100 bonus for a deposit of $25,000 to $50,000, $200 bonus for $50,000 to $100,000, $500 bonus for $100,000 to $250,000, and $1,000 bonus for more than $250,000. Once again, looking at the percentage given versus percentage deposited, it's not very big at all, and once again the account must maintain an equal or greater value after the net deposit, minus any losses to trading or market volatility or margin debit balances for 12 months. Or TD Ameritrade may charge the account for the cost of the offer at its sole discretion. Robinhood also has a bonus when you sign up from a referral. You get one free stock valued anywhere between $2.50 and $200. The bonus stock needs to be claimed through Robinhood app within 60 days, and it cannot be sold until 2 trading days after the bonus is granted, and the cash value of the stock bonus may not be withdrawn for 30 days after the bonus is claimed. Not a bad deal overall. But keep in mind the odds. So there's a 98% chance that the stock will be valued $2.50 to $10, 1% chance valued $10 to $50, and 1% chance valued $50 to $200. Bit better odds than the Webull sign-up bonuses. Overall in this category, Robinhood has the best deal. Referral Program. Robinhood has a referral program where you receive a stock value between $250 to $200, and you can earn up to $500 per year in free stocks. M1 Finance and Webull does not offer a referral program, and Ameritrade offers $50 per referral, limited to $2,500 per month, under the condition that the new account is funded with at least $3,000 within 90 days from the date of referral. And keep in mind that this $50 credit is not transferable. Overall, I'd say the Ameritrade program is much better. There's no scummy loot box random stock, just a flat amount with reasonable conditions. Next up, let's look at the premium services they all offer. First is Robinhood. They have a $5 a month service called Robinhood Gold. This gets you access to a suite of powerful tools, data, and strategies to supercharge your Robinhood brokerage account. Sounds great. Let's have a look. Bigger instant deposits. That lets you trade using unsettled funds up to the amount in their Robinhood instant account. Now to me, this doesn't really seem like that great a benefit. Maybe you have a situation where you need funds quickly to purchase a security that might move. But I think that sounds more like a benefit for those that suffer from fear of missing out. It just sounds like they're supporting those that need to quickly inject money into their account to buy the latest, hottest stock. If that's you, then that's a great benefit. Professional research from Morningstar, which gives you in-depth stock reports, cover companies' business strategy, economic moat, fair market value, risk, and leadership. Useful to have at your fingertips as you use your instant deposit to buy the latest hottest stock. Next benefit is level 2 market data, which shows multiple bids and asks for any given stock so investors can better determine the availability or desire for a stock at a certain price. If you're investing for the long term, this doesn't really matter that much to you in my opinion. If you're into day trading, then this would benefit you. But there are so many other better brokers for day trading. And finally, access to investing on margin. We'll discuss their margin setup in a later section. After you have a quick glance at Morningstar's professional research, you can use your bigger instant deposit and leverage yourself into massive gains or huge losses. It's the cherry on top of Robinhood's gold. Honestly, the benefits you get seem to promote more day trading type behavior. And if you're into day trading, Robinhood isn't really the right broker for you. So overall, not great offerings with the gold service. Next up is M1 Finance. Their premium service is called M1 Plus and costs $125 a year. Let's look at what they offer. You get an additional trade window from 1 to 2, which does fit in line with how the overall platform works. You get a 0.25 reduction on M1 Borrow, which brings the rate from 3.5% to 3.25%. You get a 1.5% annual percentage yield, which is 25 times the national average for a checking account, they claim, and 17 times the national average for a savings account. 1% cash back, which is nice, and ATM fees covered 4 times a month. It seems as though the premium offerings are more in line with their overall service and not as keen to let you butch yourself into a bad decision like Robinhood's premium. Oh, and did I mention tungsten debit card material? Webull doesn't have a premium service, while Ameritrade's premium service is the managed portfolios, which come in the form of pre-built essential portfolios that charge 0.3% fees, selective portfolios, and personalized portfolios at some percentage fee. I'd say M1 Finance and Ameritrade win this category. Part 2. Account types. First is cash accounts. Robinhood doesn't offer a cash account, but on their website it's coming, at some stage, and you can join their waitlist. Card looks cool though. M1 Finance does. They offer 1.5% annual percentage yield and 1% cash back on all debit purchases, although you need M1 Plus, which costs $125 a year. Tungsten metal card though. Webull has no cash account, and Ameritrade has one. Good thing is there is no annual fee, and they offer some bonuses, like the $100 cash bonus when you spend $500 within the first 90 days. Their card isn't tungsten, and it doesn't look cool like the future Robinhood card. Now in all seriousness, I don't think the M1 cash account is worth it if you look at the cash management account alone. Ameritrade has some nice bonuses and there is no annual fees. When it comes to margin accounts, Robinhood's one is access through the gold, which costs $5 a month. The first $1,000 of margin is interest free, and anything after that is 5%. The minimum balance is $2,000, and you can borrow up to 100% of the account balance. M1 Finance margin is through M1 Borrow, and charges 3.5% interest for the free accounts. And it's 3.25% interest on the M1 Plus account, which is $125 a year. The minimum balance is high at $10,000, and you can borrow 35% of the account balance. Webull has banded interest rates, has a $2,000 minimum balance, and gives you access to 4 times margin for day trading and 2 times for overnight. Ameritrade is similar with their banded rates and has a $2,000 account minimum. On interest percentage alone, M1 Finance offers the best by far. Robinhood does offer 0% for under $1,000, but I think if you're using margin, you'd soon outgrow the $1,000. That being said, the amount of margin you can get is only 35% of the account balance on M1 Finance. It seems bad at first, but I think it goes in line with their core products for long-term set and forget investors, so it's hard to fault them there. However, when just looking at the specs, Webull has competitive rates, a very long margin lever, so they really give you all the rope you want. Great if you know what you're doing, disastrous for a newbie. Let's talk retirement accounts. Robinhood doesn't have any. M1 Finance, Webull, and Ameritrade win in this category. Finally, Ameritrade is the only broker with a college savings account. So overall for this category, I believe Ameritrade offers the best cash account, Webull offers the better margin account, M1 Finance, Webull, and Ameritrade are all great for retirement accounts, and Ameritrade is the only one with the savings college account. For a margin trading experience only, Webull takes it, but for cash management and a range of accounts, it goes to Ameritrade. Now let's look at the markets you can access on these 4 brokers. Robinhood lets you trade stocks, global stocks with ADRs, ETFs, options, and cryptocurrencies. M1 Finance lets you trade stocks, ETFs, and fixed incomes. Webull lets you trade stocks, global stocks with ADRs, ETFs, options, and lets you short sell. The clear winner in this category is Ameritrade. It lets you trade all of these: stocks, global stocks with ADRs, ETFs, mutual funds, options, futures, short selling, currencies, fixed incomes, and cryptocurrencies. Now let's look at the features on each of these brokers. DRIP, Dividend Reinvesting Plan. This program lets you reinvest cash dividends into additional shares or fractional shares of the underlying stock on the dividend payment date. Only M1 Finance and Ameritrade allow you to do this. Honestly, this feature makes investing so much easier. Automatic reinvesting keeps your money in the market, keeps you making more gains. M1 Finance and Ameritrade are clear winners here. Automatic rebalancing. Rebalancing restores an investment portfolio to its original target allocation. Over time, as prices of securities change at different rates, the investor's original allocation will drift. The downside is that the resulting portfolio may no longer align with the investor's risk profile and financial goals. This has always been a pain to do traditionally due to the multiple trades and transaction fees. Since the modern trend is to be commission-free, the winners are the ones that allow you to automatically rebalance. M1 Finance enables this using their pies, and Ameritrade allows this through their designed essential portfolios. However, there is a 0.3% advisory fee for the essential portfolios. In this category, I think you can't beat M1 Finance's pies. Rebalancing works for your own custom pies and expert pies, which are what they call their portfolios. Next is fractional shares. Basically, the ability to purchase a portion of a stock. For example, let's look at Berkshire Hathaway stock. At the moment, it's more than $300,000 for one stock. Most people won't be able to buy their own stock early on in their investing journey, and probably later on as well. Who's got $300K cash to drop on one share from one company? I'm sure many of us would like to own a share of some of Warren Buffett's company, but the price is very prohibitive. Fractional shares allow you to purchase a fraction of these stocks. You can drop $5, $100, $1,000 on it. At any price, you can own a bit of Berkshire Hathaway. Who allows you to do this? Only M1 Finance. Next up is price alerts. If you've done your homework and you've figured out a suitable entry or exit price for stocks, alerts help you identify opportunities and manage your position. Robinhood, Webull, and Ameritrade allow this. M1 Finance does not. I don't really think of M1 Finance losing out here, because it's not the type of platform where this is necessary. Let's talk security. All 4 platforms have 2-factor authentication. Next is trading windows and after-hours trading. Robinhood, Webull, and Ameritrade have regular trading windows during market hours. However, M1 Finance is only limited to 1 per day for their free account. This is from 9 a.m. Central Time. It's the morning trade window. If you pay $125 a year for premium service M1 Plus, this becomes 2 trading windows. The morning window and the afternoon trade window, which begins at 2 p.m. Central Time. For M1 Finance users, it just gives you another opportunity to buy and sell. As far as after-hours trading, Robinhood lets you trade 9 to 9:30 a.m. and 4 to 6 p.m. after hours. Webull is 4 a.m. to 9:30 a.m. pre-market and 4 p.m. to 8 p.m. after hours. Ameritrade claims 24-hour for some stocks. For those looking to make earnings calls plays, Robinhood's after-hours access is kind of useless. It doesn't give you enough time. Webull and Ameritrade clearly wins on this here. Now let's look at market research and expert assistance features. If you're looking for a trading simulator, Robinhood won't have this. M1 Finance won't have this. Webull and Ameritrade do. It lets you practice at making trades and allows you to get used to the user interface on the platform. Next is expert-built portfolios. Robinhood and Webull lack in this category. M1 Finance has expert-built pies that are free, and Ameritrade has managed portfolios. However, there are fees for their essential portfolios, selective and personalized portfolios. Next is charting and charting tools. Robinhood and M1 Finance are quite basic, while Webull and Ameritrade offer more tools that help you make better trading decisions. Even though M1 doesn't have advanced charting, it's not really needed, considering what M1 Finance is trying to be, while Robinhood is completely lacking in this category. Research tools. Robinhood offers Morningstar professional research behind their premium service. Webull has third-party news, stock screeners, and fundamental data, and Ameritrade shows news, has stock screeners, Morningstar research, and other education tools. Here, the more info you can get, the better, but I think you can easily browse the web and get access to all the info you need, without having to pay a subscription fee. Finally, let's discuss customer support. All four offer email assistance, and M1 Finance, Webull, and Ameritrade have someone you can call when you need assistance. When you potentially have your entire life savings with one of these brokers, you want to have someone you can physically talk to and help you out. Very disappointing for Robinhood to not have this. So now that we've covered the features and some of the differences, how do they stack up against each other? Firstly, Robinhood in my opinion should be avoided. Webull is almost better in every way compared to Robinhood. A lot of YouTubers recommend starting with Robinhood because it's simple and easy to use. But that's because they don't offer you much information or features. Sure, it is easy to use, but don't disadvantage yourself. If you want a broker to trade regularly with, Webull or Ameritrade offer so much more. For example, when it comes to regular trading, Webull and Ameritrade have much more better customer service, better research tools, access to trading simulators, advanced charting tools, much better for after-hours trading, and on top of that, the access to different types of accounts. If you want access to more trading options or managed portfolios, Ameritrade is the better choice, I think. But if you want better margin interest rates, Webull is a good option. I think most people won't be using margin, so I have to give it to Ameritrade, just a good all-rounder. Now, if you are more of a passive investor, so someone that uses an index tracking ETF or dividend portfolios, or long-term buy and hold investors, M1 Finance may be the better option for you. M1 offers dividend reinvesting plan, rebalancing of your custom pies or expert pies, and free access. Yes, the charting is basic and the trading windows are limited and the margin access is lower, but this is aligned with what I believe to be their core user base is. Long-term investors, not day traders, not swing traders. Basically, there are so many better options than Robinhood. Thanks for watching, more videos to come.